Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from Chapter 5, the exercises for Group B. Okay, come on. All right, there we go. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. You still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, so we are working on problem 5-33B. And let's see here. It says here, assume that Performance Tire completed the following perpetual inventory transactions for the year. So they had a beginning inventory, they had purchases, and then they had a sale. It says compute the cost of goods sold and gross profit under FIFO. Compute the cost of goods sold and gross profit under LIFO. Compute the cost of goods sold and gross profit using average cost. Round average cost per unit to the nearest cent, and all other amounts to the nearest dollar. Okay. Which method results in the largest gross profit and why? Okay, so let's see here. Let's work with FIFO first, and I'm going to put FIFO here. Okay, so we want to compute the cost of goods sold and the gross profit. Well, if you recall, in order to arrive at gross profit, we need revenues, and then we take out our cost of goods sold, which gives us our gross profit. Remember, this is all on the income statement, right? And then from our gross profit, we take out our selling and admin expenses to have our profit or loss. All right, so it's asking us compute the cost of goods sold and the gross profit. Well, in order to get that, we need to know, we have to calculate the cost of goods sold, the gross profit, and we also have to know how much we're selling, right? So it's telling us that, for our sales, we have, we're selling 38 tires at 160, which gives us, let's see here, 6,080. Now, to take out our cost of goods sold, right? Remember, we're subtracting cost of goods sold. We had, let's see here, we had a beginning inventory of 34 at 88, and we added in the purchases. Let's see here. No, I'm sorry. Now we're adding in our purchases. We are at 4 at 90. Okay, so we start out with 34 at 180 at 88. Okay, now remember we're purchasing 29 more. Okay, at 90, but we're selling 38 of them. Well, when we sell our 38, where are we taking our 38 from? Our selling 38, remember, we have to make two entries. One, we're making an entry for the sale itself, and then we have to take and make a second entry to take those items out of our inventory and put it to our cost of goods sold. Right now, we have this in our inventory, but when we sell 38 of them, what are we using? We're using the first in, first out method. So we're taking these 34 out, right, which is this, and we need to be able to take, 4 more out because 38, when we take out the 34, we have 4 more left over. So we have to take out 4 at 90, which means we would still have remaining in our inventory 25 at 90. okay? But right now, we don't care what's still remaining in our inventory. What we're concerned with is what our cost of goods sold is, right? So let me go back over that real quick. All right, so we have 34 and 29, okay? So in our inventory, all right, we had put in 34, we had a beginning inventory of 34, then we added 29. But now when we sell this 38, we have to take the 38 out of the inventory, okay? So when we take it out using first in, these 34 were the first ones in, so they have to come out. That's what this is. And we still have to take out 4 more, okay? And that's what that is at that value. And so this is what our remaining inventory is after we've made that sale, okay? So we have 34 times 88 is 2992. Oops, maybe I should do it this way instead. Sorry. Equals 2992. And 4 at 90 is 360. So that gives me plus 360. That means I have a cost of goods sold of 3352, which gives me a gross profit of 20. Let me do this again. 34 times 88 is 2992 plus 360 is 3352, and 38 times 6080 minus 3352, 2728. Did the math on the calculator wrong. 2728. So that's my gross profit. Okay. So for FIFO, I start out with my sales of 38 at 160, which gives me the 6,080 for my sales. For my cost of goods sold, I took out 34 at 2992 and 4 at 90, which is 360. Add those two together, my total gross cost of goods sold is 3352. So I take my sales less my cost of goods sold, gives me a gross profit of 2728 using FIFO. Okay, we're going to do the same thing, but we'll do it with LIFO over here. Okay, so I still have my sales of 38 at 160, which is going to give me 6,080. That's the same. Now for my cost of goods sold, okay, remember I had 34 in at 88, and I had 29. I purchased 29 more at 90. Then I'm selling 38. Okay, but now using LIFO, instead of taking out the first ones, I have to take out the last ones first. So I'm going to take out 29, right? So I have 29 at 90, and I need 9 more out of this here 34, right? So I take out 9 at 88, which would then give me my ending inventory would have 25 in at 88. That's what would be my ending inventory, but I'm not concerned with that. That's just a byproduct of doing this. So 29 at 90 is 2610, and 9 times 88 is 792. Added those two together gives me a cost of goods sold of 3402, and so my gross profit is the 6,080 minus the 3402, 6,080 minus 3,402, which gives me 2,678 as my gross profit. Okay, so that's for LIFO. Now, for average cost, I have my sales, which is going to be the same, 38 at 160, which is 6,080. Okay. But now for my cost of goods sold. Okay. Let's look at our cost of goods sold. Remember, when we're talking about average costing, that's what we're averaging the cost. So originally I had 34 at 88. Okay, so those 34 were at $88 each, right? 34 times 88, which had a value of $29.92. Okay, now I'm going to purchase 29 more at 90. So 29 times 90 is 2610. Okay, so the total value of my inventory is 29.92. Whoops, 29.92 plus 2610, which is $5,610. But we're averaging, okay? So we add up, 34 and 29, which gives us 63 units. So I take the 5610 and I divide it by the 63 units in order to get the average cost per unit. So 5610, not 5610, sorry, 56 plus 20, do the math on the screen. Sorry about this. That's 2, 10, 5, 6, 5602. Okay, so I take my 5602 and divide it by 63, and I actually end up with $88.92 per unit as an average cost. Okay, so my average cost is $88.92 per unit, and now I'm selling 38 of them. Okay, so I'm selling 38 at the average cost of $88.92. Okay, which gives me 88.92 times 38, which rounded, okay, because the instructions are telling us to round, which gives me 33.79. Okay, and of course my gross profit then is the 6080 minus 33.79 and gives me 2701 as my gross profit using the average cost method here. Okay, so which method results in the largest gross profit? Okay. And in this case here, FIFO wins because it has the largest gross profit. Okay, and the reason for it is because, remember, you think about in a timeline. Okay, as let's call this 1/1, and let's call this 12/31. Okay, when you buy something here, over time, the prices have a tendency to increase. Okay, well, if you're using FIFO and you're taking these lower costs out, that means I have a lower expense, a lower cost of goods sold, which increases my gross profit. If I'm taking the last ones in, they're at a higher amount. Okay, so my cost of goods sold is higher, which means I have a lower gross profit. And then, of course, average costing is an average. It's someplace in the middle between the two. Okay, and so this would be LIFO. This would be FIFO. This would be LIFO, and this is your average cost because you're averaging everything out. So that would be something someplace in the middle. And as you can see, if I in between, if I have here 27.28 And over here for LIFO, I have 2678. Okay, well, 2701 is someplace in the middle as an average. Okay, so theoretically, this here exercises gives you a good comparison between the three in order to be able to see how it affects your gross profit. However, just remember that when you first start your business and you're going to inventory something, you're going to have to make the decision as to which method that you're going to want to use. Now, those people in business management, you're probably not going to make that decision. It's the accountants that will make that decision, okay, based upon the aims and goals of whatever the CEO or the owner wants, okay. But once they choose a method, they're going to stick with that method, and it is rare to change it. You can't just change on a whim, saying, oh, this month I have too much profit, so I want to go from FIFO to LIFO in order to reduce my profit, so I pay less taxes. You know, a change in the method can be made, but it is you have to have a real good reason for it. And generally, over the life of the business, only a change is only made once or possibly even twice. It's not something that GAAP allows you to make a change every accounting period or every year. Okay, so when you first start the business, you have to think really hard about how you want to value your inventory, and choose which method. And you think about it over time. Generally, assuming that you want, you know, assuming that you're going to be profitable. Okay, remember, if you're profitable, you pay more in taxes. Okay, because you're paying tax on that profit. So it's not just one thing that you have to consider. You have to consider quite a few other things. All right, so that's it for this problem, and I will see you in the next video for the next one.